Welcome back to the Crypto World channel, everyone. My name is Josh, and this video is a little bit different. This is one of your most suggested videos that you guys have been commenting in the comment section down below. In this video, I'll be going over short positions, long positions, what they actually are, how to actually enter short positions and long positions, and how this type of strategy can actually make you some money in the crypto markets. And if that sounds good to you, just before we jump into it, if you could leave a like on the video down below, and if you could subscribe to the channel with notifications turned on for more videos like this one, honestly, that really means a lot to me and it helps out the channel so much. But anyway, with all of that out of the way, let's get straight into what this video is about. So just first of all, a quick introduction on what long positions and short positions actually are. Well, essentially a long position is basically like buying Bitcoin. You're betting on the Bitcoin price going to the upside to make money, but in a long position, you are buying contracts. So it's actually a derivative of Bitcoin. It is not Bitcoin itself. It's basically like paper Bitcoin. It is a contract saying that you own a certain amount of Bitcoin. But yeah, completely simplified. A long position is basically like buying Bitcoin and betting on the price going to the upside to make money. Now, a short position is basically the exact opposite. It is a position that is betting on the price going to the downside. So if you think the Bitcoin price is going to go lower, then using a short position, you can actually make money if the price goes to the downside. And how this actually works, once again, it is a derivative of Bitcoin. It is not Bitcoin itself. So what actually happens when you're entering a short position? Well, you're actually borrowing Bitcoin from the derivatives exchange, and you're immediately selling that Bitcoin onto the market. So let's just say, for a real world example, let's just say you borrow one full Bitcoin and you sell that Bitcoin immediately on the market for, let's just say, 60,000 US dollars if you bought at the top just here. Then at that stage, while you're in the short position, technically speaking, you would have $60,000 cash while the price is going to the downside. Once again, in a short position, you want the price going to the downside. And then when you exit that short position, what you have to do is buy back into Bitcoin to repay the Bitcoin that you borrowed. So let's just say you buy back in at 30,000. That would mean that it would only obviously cost you 30,000 to buy back that Bitcoin and pay that Bitcoin back to the exchange. But in this example, you would have an extra $30,000 left over, considering you originally sold that Bitcoin at 60,000 and you're buying back in at 30,000. And that money left over is the profit that you get to keep. So that's basically how a short position works. But when you're opening and closing these short positions and long positions as well, they are very fast. You don't really have to, like apply for a loan and then go and sell that Bitcoin and do all of that manual process. You basically just hit a button to go short and then hit confirm, and that's it. You're in a short position. If the price goes to the downside when you're in a short position, once again, you're making money. You don't really see that whole manual process. That's just an explanation on how it actually works and how you can actually make money if the price is going to the downside. Now, in this part of the video, I will be showing you how I open and close long positions and short positions and what I actually use to do this. And right here, as you can see, I do actually use Bybit. And now I understand that there are a lot of YouTubers out there that kind of just shill Bybit. And I want to make it clear that this is not a paid promotion. Bybit hasn't paid me to say anything in this video. I genuinely use Bybit to actually enter short positions and long positions because it is actually one of the best options out there. There is other derivative exchanges out there other than Bybit. So obviously you don't have to do Bybit. You can go out and do your own research on some other exchanges. But once again, this is just something that I use. This is something that I actually know. And on this channel, I will only ever share what I actually use myself as a part of my strategy. Now, full disclaimer, trading Bitcoin with or without leverage, if you're doing short-term trades, that is very risky. So I don't actually recommend it for the beginners out there. I want to make that super clear. If there's anything you take away from this video, it is the fact that leverage trading in particular is very risky and you can lose money when you're starting out. So for the complete beginners out there that are starting out and you really want to give trading a go, I definitely recommend only starting with very small amounts and very low leverage to begin with. And once you've found a strategy that works for you, once you become profitable over time, then after you do that, you can begin to increase your position sizes after you actually have a strategy that is profitable for you. So once again, for the beginners out there, if you do want to give this a go, only use money that you are actually willing to lose. Now, also full disclaimer, even though I have not been paid to say anything in this video, if you do actually decide to make an account with Bybit, if you use the link down below, then both you and me do actually get a bonus. So it's a win-win. If you use the link down below, you do get a bonus that you can use to actually begin trading that isn't even your money. And you can actually go ahead and make profits on that bonus that you receive. And it's a great way to help support the channel as well. Now, if you do actually click the link down below, it will take you to this page just here. This is basically just the sign up page where you enter an email and password and make an account. After this step, you will get an email basically saying verify email. And unlike a lot of exchanges out there, you can actually begin on Bybit without KYC. That is right. A lot of exchanges out there do actually ask for, a lot of ID documents and things like that before you can really begin on the exchange. But with Bybit, those sort of ID documents are only necessary if you want to increase your limits if you're trading with really large amounts. And I thought I should mention here as well before you get further into the video, as of right now, if you're based in the United States, you can't actually use Bybit due to regulations. Now, a way around this is using something like a VPN or another derivatives platform altogether. So if you want me to make a separate video for the United States viewers out there, definitely let me know in the comment section down below. So when you actually make your account, you can get yourself these bonuses. So I won't go through all of these. You can check it out for yourself because I do understand that this does come across as a bit of an advertisement. So yeah, once again, you can check this out for yourself. This is mainly just a video explaining how long positions and short positions work and how to actually do them. But yeah, after you make your account, this is Bybit here. This is what it looks like. Basically, we have the different options up here in the top left, the different navigation options to actually get you to these different screens just here. So for example, this screen just here, this is showing you the inverse perpetual contracts for BTC to USD. So going through what these derivatives actually mean. Once again, they are derivatives, they are contracts, they are not actual Bitcoin. But if you're using the inverse perpetual contract just here, you can use actual Bitcoin and profit in actual Bitcoin. As you can see just here in the inverse perpetual, it is coin margins. So that means you are using Bitcoin to open the trade and any profits that you make are given to you in Bitcoin. So as you can see just here for the inverse perpetual, we have Bitcoin, Ethereum, EOS, and XRP. And then in the USDT perpetual, we do have a whole bunch more options just here, as you can see. Now, once again, another disclosure, trading these smaller altcoins are even more risky than trading Bitcoin and Ethereum. Seriously, trading these altcoins down here, these smaller altcoins should only be left for the professionals. But yeah, basically these USDT margined contracts, these USDT perpetual contracts, what they actually mean is basically they're based in USDT. So you use USDT, which is Tether, to actually open the position, and any profits that you make, that's paid to you in USDT, in Tether USD. So usually if you're in a massive long position, if you're betting on the price going to the upside in the longer term, if you're doing like a major swing trade, something like that, it's actually better to use the inverse perpetual contracts just here because once again, the profit that you're making is in Bitcoin. So if Bitcoin is going to the upside, it's better to be paid in Bitcoin. But if you're in a major short position, so if you're thinking we're about to enter into a major bear market, you know, a massive extended period of time where we're going to the downside, then something like the USDT margined contracts just here is better for those bigger short positions once again, because you're not actually holding Bitcoin. You're not actually getting paid in Bitcoin either. Once again, the profits that you're making in these positions just here, the USDT positions, is paid in Tether. So that's the difference between these two just here. But most commonly, I actually use the inverse perpetual contracts just here. And by the way, something new just here, Bybit did once again add this spot market to Bybit. Clicking on that button just there, that takes you to this screen right here. Once again, this is the spot exchange. So this is not a derivatives exchange. This is actually buying Bitcoin, selling Bitcoin, and these other cryptos out there as well, Ethereum, XRP, and EOS. So out of spot and derivatives, spot is definitely a safer option. Of course, there's still risks as always with investing in crypto, but spot is the safer out of the two if you're trying to decide between the spot market and the derivatives market just here. Because when you're actually holding Bitcoin in the spot market, once again, you are actually holding Bitcoin. You're not holding a derivative. You're not holding a contract. And so, of course, when you're holding Bitcoin yourself, you cannot get liquidated. That is your Bitcoin. But when you're in a long position or a short position, especially when you're using leverage, there is actually what's called a liquidation price, which means if the price goes in the wrong direction compared to what you're betting in. So for example, if you're in a long position, you're betting on the price going to the upside on this derivatives exchange just here. If the price actually goes too far to the downside when you're in a long position, it will get to a specific price called the liquidation price. And at that stage, your entire position will actually be liquidated. Now, after this video, you should actually never be liquidated at all, no matter what, because I'll show you guys how to use stop losses. Stop losses are very important when trading. And as you can see just here on the spot market, we have the limit order, the market order, and the conditional order. Now, the limit order basically means you are putting in a buy order or a sell order at a specific price ahead of time. And that's what this order book is just here. These are all limit orders. These are basically people that have put in, you know, buy orders to the downside like this or sell orders to the upside like this. So let's just say for the buy order just here, if you put in the order price just here, put in the quantity of Bitcoin that you want to buy, and then you go buy Bitcoin, basically at that given price just there, it will actually buy that Bitcoin for you if the market price goes down to that price. So a limit order is not guaranteed to actually execute because the price needs to get to this order price before this limit order can actually execute. Now, the reason why you'll do something like a limit order is the fact that this is much cheaper on fees for opening a limit order, because basically a limit order is also known as a market maker. You are providing providing liquidity into the order book just here. And then a market order is a market taker. You are taking out liquidity from the order book. So basically how a market order works is essentially you are buying Bitcoin or selling Bitcoin at the market price at that specific time, and that market order executes immediately. And because of that, you are actually paying a small fee. And just here, you can see the fees for yourself. So for the inverse contracts just here, if you're opening a limit order, you actually pay a negative fee, which means the exchange pays you a fee for opening a limit order and a market taker fee. So once again, if you're using a market order, you pay a 0.075 fee on the overall position size for the derivatives positions just here, the inverse contracts. And over here on the USDT contracts, once again, this is the USDT margined contracts right here. You actually also get that fee rebate if you're opening a limit order and the same market taker fee if you're using a market order. But over here on the spot trading, basically, if you're using a limit order over on the spot market, it's a 0% fee. So you don't get any fee back, but it's basically fee free if you're using a limit order. But then the market taker fee, so if you're using a market order, then it's simply a 0.1% fee on the overall market order that you're actually making. And to use any of this, whether that's to use the spot exchange or the derivatives exchange just here, you need to actually fund the account. So for example, if you want to buy some Bitcoin on the spot market just here, you need to fund the account with USDT to actually buy Bitcoin. And obviously to sell Bitcoin back into USDT, you need to fund this account with Bitcoin. And same with these derivatives contracts just here. For example, if you're using the coin margin contracts, you actually need to fund the account with Bitcoin, for example, if you're trying to trade Bitcoin under these contracts. And how you actually do that, basically over here on the top right, you hover over this, you come back down to assets, and you click on assets. And as you can see just here, this basically shows you the overall balance. So right now I have about $1,000 worth of Bitcoin on this account. And you'll see here the different accounts on this overall Bybit account. So for example, your spot account just here, this shows you the actual Bitcoin, USDT, Ethereum, XRP, and EOS that you actually own. And then on the derivatives exchange just here, this does actually show you any equity that you have and how to actually take your profits off Bybit. Well, first of all, you go over here to your transfer button just here, and you transfer between your spot account and your derivatives account. As you can see just here, the derivatives account just here is what you're actually using to enter those short positions and long positions, as I was just mentioning. And so basically, you could just select the crypto that you want to transfer into your spot account and then make that transfer just there. And then you go over to the spot account just here and you go withdraw, and quickly just hiding my face cam so you can see what's happening behind here. As you can see, those are the different deposit functions right here. So to deposit any Bitcoin or USDT or anything like that onto this account, you simply just click deposit and it shows your wallet address. And to withdraw any funds out of your Bybit account, basically you just click that withdraw button, and it might say you need to add two-factor authentication onto the account if you haven't already. That's basically just extra security onto the account so that if anyone got into your account, they'll need that extra code on the account to actually withdraw money. And by the way, you can actually directly buy Bitcoin on Bybit using fiat currency. So you go over here on the top left once again and just click buy crypto. And that takes you to this screen just here that gives you this fiat gateway and also these different service providers depending on what one you want to use. And as you can see just here, there's a bunch of different fiat currencies. There's euros, there's US dollar, there's Great British pounds, there's Australian dollars, Canadian dollars, and so many more. And using this function, you can actually buy Bitcoin, Ethereum, or USDT so far over on Bybit. And now with all of the basics out of the way, let's actually get into how to open a long position, a short position, how to use a stop loss, how to use the take profit, and how to use leverage, all of that sort of stuff. Let's get into it right now. So first of all, you'll see over here the different order types and the leverage once again. So the limit order, the market order, and I didn't actually cover the conditional order earlier on the spot market, but just here, once again, you can use this conditional order over on the spot market and also on this derivatives market. And I actually use the conditional order a lot because that is something that is actually very useful in my opinion. So for example, on my normal videos, when we're talking about potential breakouts and potential break to the downside, what you could do, you can enter a conditional order. So basically, if we're looking like we're about to break above resistance, but we haven't just yet, what you could do, for example, just here is you can set a conditional order to trigger at a specific price. So if Bitcoin gets to a specific price, this order triggers. Now, it's important to mention that if you're using the conditional order, I actually most commonly use the market order paired with a conditional order if I'm using a conditional order, because if you're using a conditional order and a limit order together, it's actually quite unlikely in that scenario that your order will execute. So if you want to make sure that you will enter into a position, you have to be using the market order. But once again, if you want to save on fees, you use the limit order. So let's just give a real world example of how to actually use a conditional order and when to use it. So first of all, if we place, this little line of resistance just here, as you can see, we've previously found some resistance along this level for Bitcoin just here. So let's just say if the Bitcoin price price starts gaining above that level, we can set ourselves a conditional order to actually execute the trade above that level with a stop loss back below that level in case we see a fake out. That is one of my most common trades that I actually use myself. So in this example, this line of resistance right here is coming in at around 34.8k in the short term. So let's just say in this case, the trigger price is 34,850 because of course you want to make the trigger price above resistance if you're entering a long position, if we're breaking out to the upside, and same with a short position, it's the exact opposite. If you're breaking support, you want to make the conditional order trigger below support. So once again, you can use the conditional order for buying long or selling short. And then if you're using the market order, I always have this trigger price set on last. That basically uses the last traded price to actually trigger this order. And then you set your leverage and your order quantity. So this is important for the beginners out there, especially. The higher the leverage, the bigger risk you are taking. So basically what leverage actually is, it's essentially borrowed money. So on a 10x leverage, for example, if the price goes up 1%, you are making 10% profits. If the price goes up 10%, you are making 100% profits. But the same goes to the downside. If the price goes down just 1%, if you're in a 10x long position, you are losing 10% of what you have in that position. So you can use a different amount of leverage, as you can see just here, ranging from 1x leverage, which is basically just the position itself, no extra leverage, all the way up to 100x leverage. And now, honestly, never, ever, ever use over 100x leverage. You might as well just be gambling. Honestly, anything over 50x leverage, you might as well be gambling. I myself, the highest leverage that I actually use in my strategy is in around 15 to 20%. Anything above that, you are actually taking on quite a lot of risk, especially with something like 100x leverage. That is completely ridiculous because once again, if the price goes just 1% in the wrong direction, you lose 100% of your money. For the beginners out there that are really interested in giving this a go, once again, always start on very small amounts that you are willing to lose, and always use very low leverage when you're actually starting out. So something like 2 to 3x leverage if you're starting out. I actually stick to isolated if you are using leverage, that is. So in this example, we're still using that conditional order to trigger at that price just there above resistance at a 10x leverage. Then we go ahead and set the actual order quantity. So this is the USD value of the position. So once again, I've got about $1,000 on this account. So considering the fact that we're using 10x leverage, I can actually have a $10,000 position. And just hiding my face cam so you can see what's happening behind me, that there on the long position just here, for example, that small amount of Bitcoin that you can see on this green button, that's the actual Bitcoin that you are using in this position. And once again, because it's on a 10x leverage, the overall position size is 10 times what you're actually using. And by the way, I always use this function just in here. Buy long with take profit / stop loss, or sell short with take profit / stop loss. Because before you enter any trade, whether it's a long position or a short position, you should have in your mind a plan of action. You should have a price target that you are going to take some profits at, and you should also calculate the risk that you are willing to take on that trade. So when we're opening the conditional order just here, if you simply just tick that box right there, if you're in a long position, and of course, if you're entering a short position, you do the other way around, you untick that and click the short position just here. But yeah, over here, if you click that green box just there, once again, as you can see, you have your take profit and your stop loss. So the take profit is basically your price target. If you actually have a target that you have previously mapped out, so for example, if we're in a specific pattern that gives you a specific price target, you'll put that here in the take profit. And then no matter what, always use a stop loss. No matter what trade you're taking, always use a stop loss. Now, of course, you can place your stop loss at different levels depending on what level of risk you're willing to take. So let's just say, for example, if Bitcoin is breaking out to the upside just here above this resistance, if we actually see a fake out and come back down, this stop loss will save you if we continue to head lower in a long position. This right here will actually exit your long position, taking a small loss compared to you taking a bigger loss if this is going to the downside. So let's just say we put in something like 34.5k. That will actually give you a loss of 10% if this goes in the wrong direction. So worst case scenario, with a stop loss in this case just here, you will lose 10% of the actual money that you are putting into the position. Now that's where you can play around with your leverage, because of course with lower leverage, that is a smaller percent. So for example, 2x leverage just here, you will only lose 2% of your position in this case, in the worst case scenario on 2x leverage. Let's just say the take profit is 39,000 because I know a bit of resistance is coming in at around 40,000, and taking profit slightly before resistance is always a good idea. So just here, if Bitcoin goes up to 39,000 on 10x leverage, that will give us a return of 100% on your money when you're only risking 10% of your money. So this right here is a decent little trade setup. Now, of course, This is only an example. I don't actually recommend you taking this exact trade in particular. This is just an example. Once again, if you're looking for actual trades to take, that's what my other videos on this channel are about. So now that we have all of this set up, you can go and click buy long in this case if you're wanting to go long. And then right here, it will give you a confirmation on what you're actually doing. So just here, the trigger price, which will actually trigger at the last traded price when the last traded price is that exact amount just there that you set. And then this is the quantity, so the actual overall position size of the trade. And then once you've read through all of this, you click confirm just here, and then this just here will activate this position. Once again, this is a conditional order, so right now we are not in the position. It only triggers if the trigger price is met. So just here, you actually go into your conditional tab, and as you can see here, that is that position waiting to actually trigger. And while this is still a conditional order, you can actually change the position size just in here if you want to actually lower it or raise that position size. You can also change the trigger price and the stop loss and take profit, all of that sort of stuff. And you can actually cancel that conditional order altogether. And by the way, doing what we did just then, opening this conditional order, that does not cost any fees. The fees only occur once the position is actually executed. And by the way, if you want to change the trigger order, quite easy, as you can see just here over on the chart, you can actually change the trigger order pretty easily just here. So for example, if we wanted to take it up to these higher levels of resistance just here at around 36.6k just here, as you can see, that changes our trigger order up to that new trigger price just there, which once again, that will actually change our potential profit and loss for this trade if you're changing the trigger price, because that trigger price, that is the price that we are entering the trade. So if you're clicking here on the stop loss and take profit just here, you can actually see on this new trigger price, the potential profit, if we go to the take profit just here, is only 60% instead of that 100% that we were just talking about. And the stop loss just here is a 61% loss if we're going to the downside on this new trigger price, compared to only that 10% loss that we were just talking about. So once again, anytime you're changing the trigger price just here, you need to be looking at your take profit and stop loss once again, and adjusting those to actually fit the risk that you are willing to take. And then if you want to cancel the order, you just click that X and then you go over here and click confirm, and that just cancels the order quick and easy, as you can see just there. And now let's just enter a short position to see what that looks like for the beginners out there. Now for this example, let's just set a position size of $1,000, because honestly right here, this isn't really a great time to be shorting Bitcoin, but just for this example, let's open a position size of $1,000 in a short position to show you guys how this actually works. And over here on a sell short with stop loss / take profit, you click that button as always with a stop loss in place. So in this case, because we're entering a short position and you're betting on the price going to the downside, the stop loss that you are setting will be above the price, because remember, if the price is going to the upside when you're in a short position, you are losing money, and when the price is going to the downside in a short position, you are gaining money. So the stop loss you are setting above the price in the short position. So let's just say in this case, the stop loss would be above this resistance just here. So if we break through this resistance, you want to be stopped out of that short position, because the price in that case is likely to continue to the upside. But shorting Bitcoin as we're coming into contact with resistance is actually a common strategy that is out there. But entering a short position as we're coming into contact with resistance is actually quite a common strategy. So for example, in this case, we're entering a stop loss just above the resistance just here at around 35.5k, let's just say. If we're entering at the current prices on a 10x leverage, will actually give us a loss of almost 50%. So obviously that loss is too big of a loss. So in this case, what we need to do is lower our leverage to actually adjust our risks. So let's just say on a 3x leverage, what does this loss look like? Worst case scenario is a 15% loss. Even that might be a little bit too high. So let's just say on a 2x leverage, worst case scenario is a 10% loss. And then let's just put our take profit at around 31,000, because there is a lot of support coming in at around 31,000. As you can see just there, that gives us a potential return of around 17% when we're only risking 10%. So that just there, that's not too bad. Once again, this isn't a trade that you should be taking. This is just for an example. So now that we have all of this set up, you click the sell short button just here, which goes ahead and gives you this little confirmation window. As you can see just here, you're actually given the order quantity and the order cost. Now this order cost is basically the Bitcoin that you are putting into the position. This is not a fee. And then the order value, this is 2x the order cost. Once again, the order cost is what you are using, the Bitcoin that you are using, and the order value is after that 2x leverage is applied. This is the overall value of the trade. And now this here, this is really important. This is the liquidation price. In a short position, if the price gets to that level, if you do not have a stop loss, your entire position will be liquidated. All of the money that you actually have in that position will be lost if we get to that price just there. Obviously, that's at 66,000 US dollars. And by the way, the lower the leverage, the further the liquidation price is away from the current price. So the lower the leverage, the lower the risk once again. But if you're using high leverage, the liquidation price becomes closer to the current price, which means you are more likely to lose your overall position on higher leverage. But as I just mentioned earlier, you should never be liquidated. You should always place a stop loss before your liquidation price. So now that we've confirmed all of this, we're confirming our take profit and stop loss just here and our leverage, all of that sort of stuff. You click confirm, and after you click confirm, it will pop up right here in your current position. So this right here, once again, that was a market order. So that has been immediately executed. Right now we are in this position. So as you can see just here, we see the entry price, which is basically at the current price just here because we've just opened the position. And then we have our stop loss. So if the price goes up to that stop loss just there, that will exit our position at a small loss. And then if the price of Bitcoin goes to the downside and gets to this take profit price just here, that will actually exit our position in a profit. And you can close this trade at any time using a limit order or a market order just here. And you can also add a trailing stop loss. And that there is mainly used for a swing trade. So for example, if we're continuing on a major trend, if we're in a major downtrend, for example, in a short position, a trailing stop loss basically keeps your stop loss somewhat close to the price as we're going to the downside. So at any given time, if we shoot back to the upside, you're exiting out of that position pretty close to the current price. And by the way, almost any time that you are in a profitable trade, what you should be doing is actually putting your stop loss into profits. You can do that. If the price goes down, for example, in this short position, you can actually move this stop loss around and you can move it into profits. So for example, if the price goes to the downside, you move the stop loss just here below your entry price in this short position, for example, which means the worst case scenario, you are going to make money. You are going to be stopped out in profits. And it's the exact opposite if we're in a long position. Let's just say, for example, this was our trigger price right here, our entry price. If we're in a long position just here and the price is going to the upside, you'll put your stop loss above the entry price in a long position, which means you have secured the profits basically, because if the price goes to the downside, it will trigger that stop loss in profits, which means the worst case scenario, you are making profits. And also right here, you've got the funding rate. So right here, it is actually negative, as you can see just there, which means the majority of people right now at the time of filming this video are in short positions. But if the funding rate is positive, that means the majority is in long positions. So right now, the majority of people are bearish on Bitcoin, betting on the price going to the downside. So what happens when the funding rate is negative is the short positions actually pay the long positions money to keep the long positions open. So this right here is a little feature to keep the price balanced, because if we do not have this, then we'll have times in the markets where everyone is going short and everyone is going long without any consequences. So for example, deep into a bear market, it actually becomes expensive to enter a short position considering the funding rate just here. And in a major bull market, when we are pumping to the upside, it becomes expensive to enter a long position because everyone else is doing it and they are paying that funding rate to the short positions. So basically, you actually get paid money if you are going against the majority. And by the way, in your trade just here, this actually shows you your unrealized profit and loss. So right now, this is in a very small loss, as you can see just here, because the price has actually gained a couple dollars above this position so far. And considering the fact that we are in a short position, that means we are losing money. So yeah, basically, this should show you now how all of this works and how I actually use this myself. But yeah, just before I close off the video, I'll just close off this little trade just here to quickly show you how to do it. So once again, we can use limit order and we can use market order to quickly get out of the trade. Once again, you use the market order, but if you want to save a bit of money on fees, you use the limit order. So let's just say, for example, on market order, to get this done nice and quickly, we close the entire position. You can close, half of the position if you want to close only half. And then yeah, basically we just click confirm. And as you can see just there, that position is now instantly closed because we use that market order. And if you have any questions at all, make sure you let me know in the comment section down below and I'll try to get back to you as soon as possible. Once again, I made this video just because a bunch of you were suggesting it in the comment section down below. If no one was suggesting this video, I would not have made this video. But yeah, if you enjoyed the video, be sure to drop a like on the video down below. And if you're new to the channel, make sure to subscribe to the channel with notifications turned on for more videos like this one. This isn't really my normal type of video. Once again, this is just a one-off video because a bunch of you guys did suggest the video. So if you have any other video suggestions, let me know in the comment section down below. And if a bunch of you is suggesting the same thing, I'll be sure to get that video on the channel as soon as possible. And also,